All right. Welcome, team, to this part of the training. Well, why am I bringing first of all this training? It's because I've been watching a lot of the members of the team evolving from swing trading, from intraday trading and day trading to scalping. And it's amazing to see a lot of them evolve really well and find awesome opportunities when to go into the market. But sadly, a lot of them, I've noticed that they're managing their scalps the same way they're managing swing trades or intraday trades, or even their day trades that are running for a couple of hours. You have to know that if you are being or actually working like I'd say a sniper and you're very precise with your shots you're making, then you want to take all parameters in consideration. And it's not just a question of saying, all right, I find where I need to shoot, I find the perfect entry, but it's also a question of calculating and following up that trade very sharply to have the most returns possible out of that. So that means that most of the time when you're scalping, especially if you're scalping on on 1 minute time frame, and your trade goes in positive, it's rarely that your trade would end up at a loss from that moment. If you really are scalping miniature trades on the charts. So it means that you have different ways that you can manage your trades. It can be more aggressive, it can be less aggressive, or even more if you take it completely in the way that you could go with swing trading. You'll have different results, of course, out of that. The way you do swing trading, you'll catch longer moves probably, but in a lot of cases where moves can come back to your entry or even go towards your stop loss, once you've moved into profit, you shouldn't actually really come back, or at the minimum, you should come out at break even. So with talking with members of the team, I decided to give this training. I'll try to make it short. I know it's going to be a hassle, but let's go for that. And I'm going to show you 3 ways you can manage your trades when you are scalping. Now, the market produced a chart that is very interesting for me to tell you and to show you how that can work. First, I'll explain the most aggressive way that you can save or follow up your trades, and I'll do it on this up move. I know it's not the perfect impulse entry, but it's just to give a sense of what you could do. So imagine you have the cross, you decide to go in for the long trade right there, and you want to manage that trade. Let's say we put our stop loss super high or take profit super high. The idea mostly in scalping is that you could plan and have a take profit, but you don't necessarily should have one or need to have one. The most important is that you always have the stop loss, like we know in all the rules when we're trading, and that you manage the candles and the indicators that are going to tell you more and more about what is happening. So the first strategy, and for me the most aggressive one, everything I'm going to show you tonight is something that I've used and I've found the positive and the negative out of it. Now in this case, it is not too bad. In a sense, the idea is, and I'll put a horizontal line that I'll change, make it big, I'll make it red and full, voila. So the stop loss is right there. I entered the trade, well, officially follow the rules, maybe not the right entry, but let's imagine I entered here at the closure of this candle, and I'm tracking this trade. All right, so I go in and I see that the bar is closing up here and it's creating a new one. What is the idea is that you follow your stop loss with the closure or the bottom price, in this case of a buy, to the previous candle. So it means that when this candle closes, my entry point here in this case becomes the stop loss. So I move it here. It can be 2 things, or you do it mentally and in your head the stop loss is there and you're ready actually with your finger on the close your trade button for in case it comes back and it drops to that way, or you effectively move your stop loss there. It's how you prefer to do it and how easily you can trade that or do that. In any case, there should always be the stop loss. So price continues to move up and it closes again, creates a new. What do? That stop loss moves again to the bottom of previous candle. When I say bottom, I mean including the wick. So to the wick or the lowest, if there is no wick, to the bottom of that candle. So in this case, it's to the wick. Same happening, it closes, I move it to the next wick. Same, candle close, moves to the next one, I move it to the candle wick. It closes below the body, so I could be aware it might come back, it might have a problem here. And in this case, the new candle is created, it's created below. Often in this case, I myself don't move my stop loss, but of course if you do this, because the next candle is created, it's actually opening below the body, and then you could close that because of it. I wouldn't, because in this case I leave it there, unless I see it even goes further down and it's breaking out of that. So I can continue, same, new candle created, it closes above this one, or actually from the body, so I know, all right, this can be nice, it can continue. Same story, I move it to the wick, continues, creates, I move up, and here is the moment when this candle opens, creates, bam, and I'm out of this trade. Is it the full range of the full potential of this move I've taken? No, because I've been hit out here, but at least I made, in this case, a risk reward of 2.4, which is already great. And at no moment this trade has taken me negative and I've lost potential of this trade. Even you see here, the trade goes in range after a moment, the maximum potential would have been right up there. And maybe if you would had your take profit right here and not trailed, you could have hit that. But a lot of people have their take profits quite a bit higher, and you can be taken out when it comes back. If I would have gone in later, probably officially for this trade, the cross, after the cross, but then, well, you have some other stuff in there. You see, you take partials, it comes back and it hits you out. Yes, you made 1%. But in this case, if you close the trade completely, you made more than 1% at that position or at that place if we trade and risk 2%. Now, in this case, of course, it's amazing because the trade continued quite a lot, and you had quite a lot of possibilities, and you have made quite a lot of pips. So this is a first way you can do it. The second way is a little bit less aggressive, but sadly, I'm not able to show it here on the charts because I've tried to add on this chart another EMA, but it's not doing it. So sadly, I can show it. The idea is it's actually an EMA that is comparable to the blue one we have right here, but it's even a little bit more aggressive in a sense that the settings for that EMA is 5. So if you put that setting on 5, what will happen? It will be even tighter to the candles and the wicks. And the idea is that EMA, you make it yellow, and the strategy is called follow the yellow brick road. In a sense that the price, and I'll try to draw it, I've seen it on my other chart where the line is exactly, it moves right here like this, and it goes like this. And then of course it breaks down somewhere up here, moves back under. Well, the general sense of that rule is that you follow the EMA and the price cannot close below the yellow EMA. From the moment a candle closes below the EMA, so in this case, it's not the case because you can follow, it's perfect. And in this case, it opens below, but it doesn't close below the EMA. So that's okay. But this is not okay because the price closes below the EMA, so you would go out of this trade. Same story, you can or have your stop loss that you follow the yellow brick road. The only danger you could have is that if you put it exactly on the yellow brick road, you might have gotten out or taken out here, which wouldn't be right. So I always leave it for myself a little bit under that it leaves the room for something like this to happen, that the price closes above but opens below and then continues the move up. And you track, the moment it closes below, you can have your stop loss there or manually exit your trade. In this case, it's sort of at the same moment, at a sort of the same place that happens, which is great. So you see the strategies of following your trade is potential and would have in this case had the same results. The third option, the third strategy to do it is to add what we call the, let me move this first. Voilà. Is to add the TSI, the true strength indicator or index, depends on the charts that you have. So if you go here on indicators and you type in TSI, you have the true strength index. So this is the case for impulse when we're using it here. And I use specific settings for it. So if you go to settings, you have to adapt the inputs to 8, 8, and 5. So it's a quite rapid one. And it's wrapped to the ideal positions and the ideal frame to follow up those scalping styles of trades. In sense, for the rest, you don't have much to change unless you want to change the colors of the lines. What is just important to watch is the blue line in general. Actually, a little bit the same as you have on Impulse. What is the position of the blue line compared to the red one? Have they crossed? And is the blue above for the buy or blue below for the sell? Now, you will need to add a few lines. And I see I forgot to modify this one. So first you add the 0 line, the central line, where it's actually a question of, do you buy or do you sell? Or can you be in the buy or can you be in the sell? So officially, if the line comes above the 0 line, I'm allowed to be in a buy. And in this case, well, I went in later, but I could already have been officially in this buy. So it's the first validation that you could actually enter. But it's mostly used to follow your trade. In the sense of this, as you see, I've added levels on actually 4 different ones. First, plus 0.34 and plus 0.55. I did the same in the negative, minus 34, minus 55. So the line is allowed to cross a line, but is not allowed to come back. So in a sense, in this case, you could say you follow the line, it breaks the 0.34, which is the caution level. Watch out, price could potentially come back here. But just what is ruled, the line cannot come back and cross back. Okay, so I just stick, in this case, I actually entered here on the caution level, but hey, that's fine. It continues up, moves, breaks the overbought level, which is the 55 plus or minus 55 is the oversold level. Again, same rule. It's not because it goes in overbought or it goes in oversold that it's done moving. So same thing. I just track, I continue, I'm in. It's still above. Then here you see the first sign to come out is when the blue price crosses again with the red one. This can be the first warning to come out. Now in this case that happens, but the price eventually continues to move up and it moves up. But here at this candle, you see price breaks below, closes again below the overbought level. So this is the trigger for last moment you should get out. And when you would trigger or follow again our stop loss history on this one is that in any case you shouldn't be out at any moment. So you wouldn't necessarily track your stop loss in this case, but you would mentally use that mental stop loss. And what did we say? From this point on, it went above overbought. So actually from this candle, it went overbought. So for me, I would put that stop loss at the bottom again for myself, but it doesn't mean necessarily that the moment that it breaks below again is going to be at that same level. Like you see, the moment it breaks below the overbought level again is actually right up there. So the moment you should get out of the trade is at the closure of this candle. Now, in this situation, again, this would have been a few more pips to be precise from the other exit strategy. It is 1.5 pips above the position of the other following up strategy. So it means that you've taken out maximum you could out of this trade following those 3 possible exit strategies. Now, it's the same story, of course, in the other way around. When it's a sell, like we see here, we go down. Actually, the official entry could have been following this indicator, first confirmation that we're in sell, so we're allowed to take sells from the position right here. So let me first remove this and put it in a short. So officially you could enter right there. Now I see here quite some big wicks, so that's probably news that happened today at that time. So it probably wouldn't have been the best moment to trade, but hey, it's just a question of following up. So in this case, again, you could follow the latest candle, the candle bottom, that rule. Now in this case, it would have been tricky, would have been close, but not completely. So let us do the strategy where you follow close. So the next close or the highest wicks of the previous candle. So in this case, you will track, put it here, and you might have got wicked out right there because it's actually, yeah, it just went to those levels. So you might have get wicked out. Now in the case that wouldn't have happened because your stop loss would be just far enough. Even if it hits you out, it still hits you out in positive. So you don't lose, you even make a little, well, in this case, well, probably this wouldn't have been this high because I have what, 6.3 pips. For Monica, that would be much. Monica would probably be trading around 3 pips. Voila. Well, in this case, even if she gets hits out, she makes a little over 0.5%, which is not bad. You know, it's still not losing. Because in this case, with that beautiful huge candle and the wick, you would have been hit your stop loss and lost 2% in this case. Anyway, if this wouldn't have hit, new candle is created. Of course, it closes right there. So I move it. Oh, I don't want to move the trade. I want to move my stop loss. It moves here. Next candle is created. Again, I move it at the wick. And then this guy here is created, opens here, moves down, moves back up, and you're out. So in that case, you would be out right there with a 1.87 risk to reward ratio, which is very nice. It's more than 3% that you would make on this move using this follow-up strategy, where probably if you would have entered this trade and you would have put your TP, maybe take a partial 1%, could be right, and then move your stop loss to entry and you get hit out. Okay, you made 1%. In this case, I would have made 3%. So you see, it's a different way of following it up. Now, in the case of this wick here with the news, you would, with the 3 pip stop loss, you would have been hit out if you followed the yellow brick road strategy or if you follow the TSI like I have here. But if your stop loss would have been a little bit higher and you wouldn't have been wicked out, again, we follow the rule. So it's come down in the sold area. So I can be in, I can be in, I can be in, I can be in, breaks the caution level. So I know, all right, price at any moment can close and get me out. And then actually right here, it breaks and it closes above. So officially in this candle, I should get out of the trade. Now, when we see right here, it crosses back up and then continues, does the continuation move, you could re-enter in the trade or do a new re-entry if you got taken out. If you still were in, well, then you have the luck of being able to continue and ride the rest of the trade. Why do I often, and that's what I said, I often don't put TPs in anymore, because sometimes the price can move so fast before you actually, with the TSI, have the possibility to go out. You can ride some trades super long and it gives a lot of result, of course. In this case, we come to the oversold area from the moment we break, we are in this candle. So in this candle, we have already 3.4 risk to reward ratio. And it continues to move down. We have the cross. That is actually our first warning that, or a first way you could exit. In this case, it means you exit in this candle. Where you exit exactly will of course depend on the moment the cross happens and locks in. In the baddest case is when the price crossed above this line, which would be the next candle, which would be right there. And in that case, you nearly maximized again all the pips you could get out of this. Now, of course, this isn't the best example because you have a news wick, a news candle in there. That is a bit bizarre. But of course, if you wouldn't trade around the news, you can manage those situations and those trades as well. For instance, here, good example. We get the sell, you enter the sell, for instance, when you're allowed, right there. Same story. Let's use Monica's 3 pip stop losses. No TP. And let's see what we get. Enter the TSI. We're in, comment over at a caution level, continues in, crosses above, below, sorry. So it's not allowed to cross above again. So we get out of the trade right there. You could say, well, yes, but then you lost the whole continuation after. Well, yes and no, because again, officially I would be out right, well, in this case, probably around these 2 candles, and you still have a 1.5 risk to reward ratio. Often, what is the nice thing again? Price moves up, rejects, comes back up, but is not crossing again in the buy zone, so you're not allowed to take any buy from that indicator, and then it crosses back completely, which could be a potential new entry again. You could go in for the short again. Try to ride it out as far as possible. Breaks the oversold level, can't come back. It comes back right here. So again, you're out on, well, probably between those 2 candles, which would again have made you a risk reward of 1.5. Now, again, it crosses and it continues. It's that little move. If you're scalping super aggressively, again, you could take a new entry and take the continuation of this. Of course, it depends a lot on the other strategy that you're using. So it's not an impression I made for using the impulse strategy, but it's really just about following up a trade and just focusing on the different strategies you could have to follow up. Well, are there any questions up till now? Let me first start with that.
First of all, man, I want to congratulate you on that because that was really good. Even I learned something, Pino. I like that. I like that new index, that TDI. So
TSI.
TSI. Yeah, that was really good. Listen, I just remembered I'm going to stop the recording now so we can take questions calmly. But well done for that, and that's going up to our YouTube channel. Good stuff.
You're welcome.